All right, guys. Oh, shoot. No. Why did I do that? Oh, the worst. Okay. Sorry about that. Good morning. Good morning, everybody. Make sure that we're live here. So I went to go check my tab because I was checking some news quickly on Bloomberg. And I was switching it up and I click X on my Mozilla tab. The worst. It doesn't matter. Good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, November 17th, 2022. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. Make sure to subscribe if you haven't already. It will always be free, no charge for this stuff. We love doing the YouTube. Glad to have you on board. Let's go ahead and rock and roll this morning. We got some stuff to cover. Yesterday was a snooze fest. So let's get to it. Let's get started around the horn. Dow futures down about 375 points. Nasdaq down 177, about 1.5%. S&P down 1.30%. Russell down 1.45%. 1831 is the actual last price on the Russell futures contract. 83.31 on crude oil continues to slide down 2%. Gasoline down 1.27%, $2.47. Gold futures down 1%, 1758. That's where that is currently. Silver 2086 down 3%. Euro dollar 103.16, down 78 pips, but still above parity. 140.53 for the dollar yen. That is up 100 pips, down up 0.72%. And pound dollar 117.68. That is down 147 pips. Back to Bitcoin, 16,225 seems to be holding around that 16,000 level on the futures cost. Ethereum 11,669. Let's go ahead. See if I can bring up CXBT. Was it XET? That's the one. Ethereum, Bitcoin. This is Ethereum dollar cross. I just want to get that chart up so we can go over it because I have more Ethereum than I do of Bitcoin. So I think Ethereum is probably something we want to see. Okay, great. I got that hourly chart. Okay, S&P 500 this morning as we went around the horn. Excuse me, 10-year yields 3.782%. That is up. Dollar index is up 0.83%, 107.15. That's why the markets are down, and the VIX is up at 25.02, up 3%. Let's go ahead and go over S&P 500 futures this morning. Here is your setup. Let's go to the daily first, and then we're going to start breaking it down to show you what kind of a weird week it's been, at least for the indices. So we'll go ahead into our macro corner first. 39.17 current ask price on S&P 500 futures. 3900 is our support. That's what the yellow line is. And again, we are now at the 100-day moving average. Let's see if we hold that. Sometimes we do get all the moves in the futures market overnight. If we can break down below 3900, well, could we go short? And I've said that. Again, we start hitting some resistance. Again, that 200-day moving average, again, right around 4,100. We got close, but didn't get quite there. So again, we're not going to get some green shoots every day. It's been a nice trading opportunity the last couple of weeks. I still say the bottom is in. Yes, if you guys need a reminder. But at the end of the day, really that this is called just price action. This is what it is. And really the movement from today was just more earnings. Nvidia came down. They missed on EPS, but they beat on revenue. Again, more layoffs on Roku. That was announced today around the news. Nvidia and Lockheed Martin just announced a new partnership, so that's some good news. Bullard was really the real thing. This is Federal Reserve voter, Bullard, James Bullard. The base case is slow growth, but recession risks have risen. Despite Fed rate hikes, there are some positive factors for the economy, such as flush state governments, excess household savings, and high household wealth. So again, here's another quote from him. Bullard, in the last 6 months, many of the pandemic supply chain issues have subsided. The labor market continues to look very good. That's more quote from him. Another quote, inflation risk may be elevated now as a result of the Fed's anti-inflation efforts, but this is not the default scenario. Basically, he's saying that inflation risks are elevated now, or may be elevated because of their rate hikes. This is the Federal Reserve. If inflation begins to fall in 2023, the potential for a good dynamic exists. What does that all mean? Again, we know that's Fed speak. That's everyone talking. He had the big one, the headline that came out that made futures come down. Says interest rates will need to continue to rise further to bring inflation down. We talked about this on our email newsletter last week. There is no pivot. Nothing has even given us the indication or even the idea of a pivot. Again, that's what the market is saying on that big move. But nothing has been actually resolved. Yes, CPI came in cooler than expected. 8% is still high. Let's not celebrate too much. I mean, it's nice. We're coming down the right spot. But again, a hawkish Fed, even less hawkish, is still a hawkish Fed. So again, they are still raising rates. Why is that a problem? Because that creates headwinds for us. So again, it's not a straight shot. Again, they didn't pivot, but again, we're starting to lay the foundation down. At least get us to the 200-day. If we can break that, that is a Santa rally. But again, 3,900 recheck or retest. We talked about that yesterday on the morning note as well. That is completely natural, normal. If we do break down that, this is where I want to start going. So again, a break of 3,900, really the target I would go to, and let's go to the hourly because it's more short term. Again, we do have the 200 moving average at 3906. So again, a 3,900 break is pretty much what I'm looking for. If that does break, again, I'm going to be very, very cautious with the OPEX tomorrow. OPEX being option expiry and futures contracts. So 3925 would be my stop if that's the case. If we start breaking down below 3,900, I want to go ahead and first my TP here around 3845 and then if not, retrace the whole move to 3764, which has happened many times before. Nothing crazy. That wouldn't be absolutely insane or anything. The problem is that this stands out right here. I sent this morning, and I had this on Twitter. So this is from the blog. Excuse me. CPE's CBOE options equity put call ratios. Look at the put call ratio. The last time we've had something that elevated was the last CPI report, and everyone was offsides, and we had a short squeeze. Could that happen tomorrow? This could be that front running of just selling ahead of the buying tomorrow. If you are planning to short, I would really, really be nimble. Maybe get out of it today. We may not even break 3,900 today, anyways. But here is the S&P 500 in the past 4 days. Here is Friday, not a whole lot. Here's Monday, not a whole lot. Tuesday, nice pop on that PPI, but not much. And then Wednesday, kind of slowly but surely. So again, 3,900 is what we're targeting. If we can get there and we break down, yes, we could play some puts. But until then, nothing has really broken. Let's go over Qualcomm, yesterday's stock of the day. God, what a great start, right? Carlos, good job. Well, I didn't signal this out. I still have the calls. God, they had high UOA, unusual options activity. I think it was just a play on semiconductors. I really didn't send this out or anything. It was something personal, and I'm just going to hold it for tomorrow's OPEX. Let's see what we get. But again, it's looking like a loss in terms of the Qualcomm stock of the day. Let's go over that. Everyone wants to go over that. S&P 500 SPY break of 390. My target will be 385, but it has to be same day. You got to get out of it today. Maybe leave a runner best case. But again, that's really what you're looking for is around 389.79. That's what I'm looking. Playing the indices. They haven't really moved much, so a tough trek so far this week in terms of the indexes. One trade I do have open is Disney, and Disney was holding the 100-day but kept sliding and sliding. We're finally below it. Tomorrow is OPEX, so again, the thing is already down 90%, which really sucks. But we had some really good trades this week on Qs and AMD, so that does help. We are green for the week, but again, let's see if Disney can at least get us to salvage something. It's already down so much. It just sucks because I was waiting for this breakout here, but we didn't comply. Disney did not give us the price action we wanted. So that's a tough one. IWM yesterday was an L for me and Masterclass, expecting this breakout to 190. It did fade, and it expired yesterday. So, those are the ones that suck. It happens. It happens. But we move on. Keep firing like Kobe, rest in peace. Keep shooting. Keep shooting. That was his thing. Keep shooting the ball and see what we can do. Let's go to the dollar index real quick, and then we'll answer some questions. Let's go to the daily. And again, that 200-day, something has to give. Do we get there, or do we get back to the 100-day, which is 109.808? I still think we get here 104.61 by Thanksgiving, which is next week. Expect volumes to be a little dry. Tomorrow should be the highest volume day for the rest of the month. So just expect that because tomorrow is the options expiry day. It is the week before Thanksgiving. Actually, technically, today is the week before Thanksgiving. And I hope everyone has a great Thanksgiving with their family. But that's where we are today, guys. Yesterday, guys, was just a quiet day. not much going on. And that does happen, but you just got to be patient and see what we get. But today, I mean, you do getting a little bit of a fall here, but until 3,900 breaks, not really I can do. I put all my money in FTX. Oh no, Jimmy. I hope you're being facetious. I hope you are. I hope you are. Some words for Nvidia. Nvidia did report earnings. Again, if you are owning Nvidia, which I do, let's go ahead and take a look at the PE multiple on a forward basis on Nvidia. Nvidia PE multiple is at 36, pretty expensive, especially relative to a Qualcomm, which is about 10, and Avgo Broadcom, which is 12.83. If you compare it to their nearest peer, it's 2173 for TXN and AMD being 1987. That's the PE ratio. That's the forward basis based on their guidance. How about current PE ratio? 52 for NVIDIA. It is expensive. It has run its course very, very quickly. I still love NVIDIA long term. I still own it. The problem with NVIDIA is we're just traders here. There is a gap to fill here at 141.99. So we keep that in the back of our heads. Not a lot of volume next week, as we know. Really, your target here is 148.44. If you could, I guess you could break 155, maybe 153. You could possibly target the 150s, but you're kind of running out of time. So would I buy more NVIDIA here? No, I would not buy any more NVIDIA here. It's run up so fast with the rest of semiconductors. Remember, we came from 108 to around 160. That's a big, big move, guys. So again, we need a little bit of a pause here. Maybe retest that 100-day of 149.83 or fill this gap here at 141.53, and then we can go from there. But no, I would not be adding more to NVIDIA today. Same thing with Target. I own Target as well. That was down. Again, 3-day rule in effect. We're always watching and see where we go from there. But pretty much sideways at 154. I told Investment Club that they could get out of break even because we added to it. But some probably took it on our initial TP, which was, I believe, 170 or something like that, 170-ish. So there was a lot of moving parts with TGT Target. The question is, do we get the move higher for the Santa rally of what we're expecting? What would negate the Santa rally expectation? That's a pretty big question. Let's take a look at it. Again, energy is coming down. That's something I talked about on the watch list. I don't want to see that. Really, what would negate the Santa rally, in my opinion, is back to 37.50. If you start getting around that level, I don't think we get there by Christmas, but 37.50 would be the level that now you start hitting red flags because we should stay above 3,900 for now. Again, we got some retesting to go. Maybe we retest the 20. We're not even below the 100 yet. So again, still a bullish run short term. At least this is where we are. TGT calls at open were lovely. You took TGT calls at the open. There you go. Well done. Are stocks attractive here? Why or why not? I still buy every week. I have added to some positioning. In terms of where I want to just rush in and buy everything, that's not usually the best route. But again, I am still bullish on the market. I'm still buying stocks every week. I'm buying SPY-G today, like I do every week. Dollar cost averaging is the way to go for me. In terms of the stocks you're looking for, the ones that I have been seeing, again, that has been seeing in terms of undervalue, energy, healthcare, still the staples, still the defensives and the value are the way to go here. Look at this drop on UNH, 558 to 511. Looks like it's starting to hit a kind of a trend line up, kind of crude one if you want to say that. 500 would be a good target on UNH. Again, it was just at 558 just a couple of weeks ago. So UNH is a position I hold. 441 would be my level to add more. I've owned this stock in around the 200s. So I'm pretty happy with UNH. Again, anything in that terms of healthcare, Humana, UNH, those are good companies to own long term. XLE, you could see, has rejected that top. I like energy, but just not here. Let's see if we can get a little more of a pullback. More recession fears, Russia price cap, China COVID could get oil a little bit down. Remember, oil is not XLE, two different things. So again, look at crude oil in that same time period versus XLE. XLE is getting crowded because it is value. They are cheap. So again, a lot of value investors are piling into energy. I like energy, don't get me wrong. But again, you're starting to get to resistance here. I would not short XLE. I wouldn't even trade XLE because the volume sucks on options, to be completely honest. But again, if you're trying to short something, again, if XLE does come down or energy does come down and another stock sector does not pick up the slack, semiconductors, technology, we're going to slide more on S&P. We'll probably get to 3750. So again, let's cross our fingers that energy still catches a bid and that investors still want to buy. Remember, Warren Buffett and all these hedge fund managers have also put money to work. They're not just sitting on cash. We talked about that. These hedge fund managers cannot sit on cash forever. They have to buy. Was November the buy process? Well, you'll be the judge. But again, I'm seeing a lot of put call ratio that's too high now. We're probably going to sort tomorrow on a short squeeze, data dependent. There's not really much data tomorrow, so not expecting anything to kind of derail that. Again, depending on how we close today. Again, we're sitting on the 100-day on the daily. So really, what has changed today other than Bullard speaking? Remember, guys, when it came to the earnings estimates, we had very low bars as it is. If you're a company today in this micro environment, you have all the excuse in the world to pull guidance. Apple doesn't have guidance, and they're the biggest company on the world. So it's not like you can or you don't have to give guidance. But if you're not giving good guidance, you're gonna get punished on your stock price. So keep those companies in mind when they're reporting. Since tomorrow's OPEX, do you see crushing it puts tomorrow since sentiment seems to be changing with the Fed 7%? Yeah, exactly what I'm saying. And again, here is the breakdown from the CBOE. This is the put call ratio, and I sent that out this morning. We haven't had this high of a put call ratio really since 2008. Really the financial crisis. We're nowhere near a financial crisis. Let's kind of put things in context, right? But again, we're tapping the 100-day. Does that hold? Does 3,900 hold? That's something we're going to be watching today. But tomorrow, short squeeze, maybe we hold that 100-day. It could get crazy. Could get crazy. Would I want to put tons of money to work on that theory? No, I wouldn't. So we're getting a little bit of a bounce here. Let's see how the day goes, Cameron, and we'll go from there. But again, could be a short squeeze tomorrow, really dependent on how we close today. So I don't expect a ton of volume today, guys. Kind of those feet up days where you're not really trying to scalp everything in the market. You kind of have to wait for things to head to you in the setups that you want moving forward. So again, we have the, I guess, stock of the day, SPY for me. And again, I'm still waiting for 389.79. If that does break down, then I definitely want to target 385 puts or 384s for a short-term move. And again, that would be completely natural and normal for any kind of market. It's not exactly an absolute, oh, the world's ending sort of thing. Again, guys, no green. Not going to get a green shoot every single day. It doesn't happen. And this week has been just chopped. So it almost feels like we're getting Thanksgiving trading now, where it's low volume. So we'll watch it every day. As always, this is what we do. Have a great rest of your morning. I will catch you guys for the morning note tomorrow on Friday. We will see you then. Cheers, guys.